people can tell me to stop.
Lower the lights down, hand over my crown, hand over my heart. I do this for my town, I do this for my crowd. So turn me up real loud, my time. None of you people can tell me to stop.
Hello, everybody. Welcome to this week's episode of MGR Unplugged. David, how are you today, buddy?
I'm great, as
All right.
always.
Today, I actually wanted to get back to our roots a little bit. And I know there's been a lot of things. Well, actually, our clients are asking a lot of questions about e-commerce specifically, which is where it's our specialty. And we've kind of, in the last few episodes, deviating a little bit of our core competency, which is e-commerce and digital marketing. So I wanted to get back a little bit because, like I said, you specifically get a lot of questions of, about new trends on Amazon stores, on marketing, advertising, and so forth. So I wanted to kind of have a little episode where we recap, everything that is new these days in the field of e-commerce, and obviously the leading e-commerce online retailer, which is Amazon. So let's start with Amazon, actually. I know I read a lot about new algorithms and new search techniques and marketing techniques, but you are more entrenched with that. What is new specifically with Amazon about the new algorithm, or how is that affecting listings and things like that?
Yeah, so the big new thing that they added was, they're always updating their search algorithm. It's like Google.
Right.
Google changes their algorithm all the time too. So Amazon does too. And the main thing that they changed recently is that there's kind of the 4 core factors that are always the same, which is sales volume, product reviews, seller reviews, and conversion rates. Those pretty much always the same. Those are always going to matter. But now one of the new factors that they're putting a little more emphasis on is external traffic. So they want to see your listings get basically traffic from outside of Amazon, not just within Amazon. And that will help boost organic rankings. And this is kind of ties into the bigger thing of, we've talked a lot about the next kind of 5-10 years of e-commerce. And one of the big trends that we've talked about for a while is like social commerce. Mm-hmm. And that's Amazon's biggest weakness, is that they don't have social commerce, right? Amazon is purely a marketplace. You go mm-hmm. there to buy things, and it's not a place where you necessarily are discovering new products. There is product discovery on Amazon, but it's mostly like the majority of purchases on Amazon are basically someone goes to Amazon knowing what they want already, not necessarily going there to shop around. And that happens a bit, but for the most part, it's just, I need
You're
this,
right.
I search it, I buy it. That's it, right? Mm-hmm. But the other part of e-commerce that's massive, obviously, is the social commerce and the discovery part, and it's kind of like the mimicking of
The
like
browsing, basically.
of like going to a mall and
browsing,
looking around,
window shopping type thing.
right? And so that's Amazon's biggest weakness, in that they don't really have that. And so I think one of the reasons they're emphasizing the external traffic is because they're making their own kind of pushes towards social commerce. So they didn't work with influencers for a long time, or at least they did very little. Like, it was kind of very basic stuff. And now they're going a lot heavier on influencers. They're making storefronts for influencers. They're trying really hard. They have their Amazon attribution system, which lets you attribute sales across different channels. So they're pushing that much more. And now it looks like they're going to favor, and again, the other 4 main factors are still the most important, but this is like a 5th kind of new factor that is going to matter, which is, can you bring people from outside of Amazon in to buy your products?
So, but let me ask you, this external traffic, because I remember back in the days, or like last year, we were talking about Amazon has become like another search engine for products, basically. Companies.
It's the biggest search engine.
It's the biggest search engine for products.
In fact, it's hard to know exactly, but I've seen numbers that estimate as much as in the United States, 70% of all online product searches are on Amazon.
Exactly.
So that's massive.
And that's what happened when that transition. Well, like before, you were looking for anything. Like a hair dryer, whatever you were looking for. You will go to a search engine, let's say Google, and then you find tons of links to Amazon products there. and then or other brands, other stores, but then you link and then you go to Amazon, and then advertisers realize, okay, we don't need to advertise our products on Google because now Google is not the biggest search engine for products. We might as well just pay Amazon directly to advertise on Amazon. And then, so that actually killed a portion of the external traffic for Amazon. Like if I have a product,
Well,
I don't need to advertise it on Google. So
another thing that's happening too is Google has their own Google Shopping now,
right,
and has their own Google like product ad network. So a lot of times when you search products, there will be products at the top, and those are sponsored ads. And one thing that Google's doing is to fight Amazon is Amazon used to dominate Google search pages as far as SEO too, because Amazon SEOs the hell out of their site. And so they used to dominate the results page, and now not as much. And a lot of that is because you never know exactly what's going on, but basically Google is trying to not put Amazon first for search results for products anymore, because Google wants to promote their own Google Shopping. And so Amazon's losing Google search traffic that they used to get too. So they're actually now part of, in addition to the social commerce, they're incentivizing the people to do Google search ads and to optimize for Google SEO in addition to Amazon SEO too.
Okay, so right. So when Amazon says they are favoring now external traffic, means that the sellers or the resellers that are also selling on Amazon, how do they drive the external traffic to Amazon? Through their own websites, their own optimization?
I mean,
articles, blogs, things like that?
Anything doesn't really matter.
Okay.
But the main way is obviously, they want third-party ads. So they want people to shift. Like if you're a typical brand, right, that has an omni-channel presence, right? So you have your website, you're on Amazon, maybe you're in some retail stores, whatever,
right?
And you spend whatever, you have your monthly like Facebook ad budget, right? And you're spending $100,000 a month. They want you to shift some of that budget towards pushing people to your Amazon listings, not just your listings or your retail partners, whatever. And then in addition to that, obviously lots of Amazon, again, this is part of the Amazon attribution and their influencer. Amazon themselves are working more with influencers, but also they're trying to encourage sellers to do more influencer marketing as well, because that's part of the social commerce where I think Amazon knows that's one of their weaknesses. And so they're trying to make it very easy for sellers to work with influencers by giving easy attribution and referral links, because obviously that's one of the challenges with influencers is knowing the results from the campaigns.
Now, from the seller standpoint, I can see them kind of, because Amazon already takes an average of 15% or so from the revenues of selling something, and if now you have to add more on top of that to, let's say, advertise on another channel, let's say Facebook, Google, whatever, so it's really cutting into your bottom line when you start adding the advertising expense, driving traffic to Amazon, and then being on Amazon and selling through.
Yes, but also it evens out, because this is for Amazon's organic rankings, and Amazon is a very competitive marketplace, and it's tough to win on Amazon. But when you do, and you rank organically for top keywords in your area, in your category, I tell this to clients all the time. I mean, the goal is to rank organically for these keywords, because that's when you print money. Because if you're ranking organically for a keyword that gets 5,000 searches a day, and you can get 10% of those to buy your product, you're doing 500 sales a day that cost you $0.
Right, and that actually is one of the things that applies to all channels, basically. The same thing with like Google. Obviously, you pay to advertise your product with the goal that in the future that
and that's
person
why
becomes familiar with your brand, and then you organically get the same customer costing you $0. So that's the lifetime value of the customer.
And that's why one thing that like I personally have focused on much more in the last year plus is, and other agencies and stuff have too, is what's called blended ROAS. Not just like before. I mean, we still do. Obviously, you look at the individual ROAS, return on ad spend of each thing. What is the Facebook return? What is the Google ads, Amazon? But the blended, and so for example, if you're looking at Amazon, you say, okay, our direct sales, as far as direct advertising, maybe it's gone down. So maybe you were getting a 2.5 return, and now because you're spending more on Facebook and you're doing influencer, you're down to a 2x return. But because you've sacrificed there, but now you're ranking organically more,
Right.
and you're getting an extra 50 sales a day for free. Now your blended ROAS used to be a 5x or 4x, and now it's a 7x, and
Right,
that's worth
and I
it.
agree with that. I mean, I always say that you
have to look at the whole back thing.
I don't even look at the specific channels where you pay. I always say before and after. Before advertising, you're getting X amount of sales. After advertising, because the attribution these days is so difficult to track. I mean,
Yeah, and
as much as
especially now, even with the new Facebook updates.
Right.
I'm sorry, the Apple updates for Facebook.
for iOS and all that. So we can get lightly to that in a second. But the main thing is that the attribution on the what they call now the touch points, which is how many times a customer or a potential buyer touches a company or an ad or a product before they actually buy it, and from how many different channels. Like you can see it on your cell phone, you can see it on your mobile basically, or email, and then you go on Google organic, then you see an ad, then you go back to Facebook, whatever. You have like multiple touch points, and then you go organically on your own just to review before you make the purchasing decision, whatever it is. And there are so many, even TV and things that are kind of hard to control the attribution, that you can't really say, oh, this thing actually did it. The attribution method is very is called, like you said, blended attribution as well. So you need to almost look at, before we invested X amount of money into advertising, marketing, whichever channel, we were making or selling this much, and after we're selling this much. And then you can always optimize each of the channels, but it's very hard to specify which one generated all the products. I mean, a billboard is going to be all branding, but maybe the billboard is the one that triggers the final purchase decision, whereas the billboard is not going to tell you, it's going to be able to track anything, or even commercials on TV. Commercials on TV, you don't act on them right away. You watch them, and then finally you decide to do something. So,
I mean, the bottom line with Amazon is I've pretty much never seen the investment it takes to get to rank organically on Amazon not pay off, because then it's a different ball game. I mean, when you rank, or anybody who's sold on Amazon or looks at this, you can just go. There's plenty of tools. You can go and see the organic sales of the products that rank organically for the top keywords. It's worth it, man, because basically, like I said, 70% of product searches are on Amazon. And as we all know, majority of people, they don't even scroll that much. The majority of sales go to the first 5-10 products on that page. So being there, it's the digital real estate. It's the digital equivalent of having a store on Rodeo Drive or whatever, right? It's that valuable.
And I'm not sure how many people know this, but just like Google modified their basically their search results pages, like they keep doing it all the time, but basically what they did a few years ago is that they started adding more of the paid ads at the top and at the bottom. And organically on the page one, you have like maybe 4 or 5 or 6 listings, and then you have 4 at the top, 3 at the bottom that are paid. Amazon is doing the same thing.
Yeah, obviously.
Before you had the sponsor ads right at the top, and then the rest was organic, and now they intercut the sponsor with organic. So it's a little more difficult for the person that is not paying attention to see which one is a paid endorsement or ad,
but obviously
versus the non-paid.
The paid, to if you're especially on the top search volume ones, the cost per clicks are very expensive.
Right,
so,
exactly.
I mean, it's tough to, most of the time on those, like if it's a high search volume keyword, we're just trying to break even on the search ads.
Yeah, no, I'm not getting into the RS of the where the placement of the ad. I'm just saying that Amazon is also promoting a lot of the paid ads, because that's obviously what the money is for them.
Yeah, of course, because they want to make money, but it doesn't matter. I mean, they have a couple, and then it's all the organic ones.
So from the reseller standpoint, and this is the question you get all the time. Like a lot of companies come to us and they say, okay, I want to be listing my products on Amazon, and they either don't have a separate store like a Shopify or something, or they do and they just want to have Amazon as another channel. With that in mind, they always ask, if I have the store, we're gonna start my sales, and that's not how it happens. So, what is the recommendation that we always have to clients as far as like budget or something? I mean, how do we approach them, or how we reply to them when they say, "How do I get my products to sell?" Because I have it listed now, but they're not getting any traction. So,
I mean, like I said, it's an investment. So you have to. It takes time. You have to. Basically be willing to spend. It depends on the category you're in. Obviously, some categories are much more competitive than others, but typically if you have a 3 to 6 month strategy and approach, which is what we always take to spending in the right places, a lot of that is just within Amazon's own ad tools, and then you look at external ad tools. Then over 3 to 6 months, you can rank organically for a lot of top keywords. But it's an investment. And in the beginning, you may lose money or hopefully break even is always our goal in the beginning. And then you go from there. Now, again, there's tons of different strategies you can use, and people can pay us if they want us to.
Right. No, I understand.
Give them the different strategies. But the other thing too is that on Amazon the keyword diversity is pretty large, whereas for every like main top keyword in a category, there could be hundreds, sometimes thousands of variations on that, where there's much less competition just because nobody's optimizing for that specific phrase, but that phrase might get a couple hundred searches a day, and then you can rank organically just for that, and then you start generating sales from that. And again, like I said, the algorithm cares number one about about sales. Number one, that's the number one thing that matters for ranking organically on Amazon, in addition to the other things. And so as you start generating more sales from the niche keywords, then you can start focusing more on the top keywords. That's kind of the strategy we take.
So I'm curious now.
But yeah, it's an investment. I mean, Amazon is extremely competitive.
Well, the bottom line is that
there's over 3 million sellers now, to put it very simply. And keep in mind, when the reward is, this keyword, basically ranking on the first like 3 to 5 listings for this keyword could mean $50,000 in sales a day. Obviously, people are gonna fight hard for that, and so you have to be ready.
And that was my point. My point is that just because you put your products on Amazon, that doesn't mean that you're gonna start selling right away, or you're gonna be on page 1. Like you said, people hardly ever go beyond second page, if that. So you need to earn that ranking, and to earn the ranking is time, a lot of work, and a lot of optimization.
The omni-channel approach is the best one, because I mean, even if you're selling on Amazon and you're focused on Amazon, I would still have other channels as well in addition, because everything adds together, you know, and that's how you get to be a large. Obviously, if you're just starting out, you have limited resources, you have to focus where you need to. But as you grow, omni-channel really is the answer. And you just look at even the D2Cs that are like the most famous, like the Harry's. I mean, Harry's sells in Target now, and they sell on Amazon, and they sell on their website.
Sometimes they have limited inventory, or some parts that they sell on Amazon, but they sell DTC. But that's fine.
There's a million strategies you can employ,
but sources.
There's a ton of strategies you can employ. Like you can have like one thing that is pretty common is having like limited edition products only on your site, and then the more mass sale products. There's a lot of options, but.
So I'm curious about the costs, because we're talking about Amazon advertising compared to, let's say, Facebook advertising, Google advertising. Those are the 3 major advertising platforms right now. You have the Facebook/Instagram, and then you have Google, obviously, with the different variations, whether you do the YouTube art or Google Ads, which is formerly AdWords. And then you have obviously Amazon for your products. So do you know, like for example, for the same product or the same category, how the CPM compares on one channel or another? Like if I have a whatever product category you select, and you say, okay, I'm going to have an ad on Google or something, and my CPM is going to be
it's
$14,
$15. They do, like Facebook does CPM, but Amazon and Google do cost per click. So Amazon doesn't do CPM, right? Amazon is expensive as far as cost per click goes relative to Facebook, for example. But that's obviously because on Facebook, it's basically demand generation for the most part, which is you're putting ads out in front of people who are not looking for your products and trying to convince them to buy. Whereas Amazon, you're bidding on, oh, this person's literally looking for my product. The odds of them, the conversion rate is going to be much higher, basically. I mean, Facebook, a good conversion rate, if you're doing Facebook ads, especially like top of funnel, if you get 2%, that's really good. On Amazon, you can get anywhere from, on the low end, like 5%, but on the high end, I mean, we have clients who do 20% conversion rates, just because people are looking for that product.
Yeah, you have a much
you'll
more.
Never, ever in a million years get a 20% conversion rate on a Facebook ad.
Right. And but the on Facebook CPM and cost per click too is being increasing every month, pretty much since the beginning of the year, especially when the pandemic has really steered traffic towards online shopping, obviously, as we know already. But all the numbers that I see, and I have a chart or I forgot the source, but actually they have a pretty good indication of what the costs are month per month of CPMs depending on categories, and it increases about literally like 5-10% every month. So and that's one thing that also we as an agency need to relate to our clients, that they have a fixed budget. Let's say that a client says, I have $3,000-$4,000 a month to put on Facebook advertising, and then we're getting X amount of traffic and impressions and clicks and all that stuff. The buying power that you had, 6 months ago doesn't relate to now. Your impressions are going to be less, your CPM is going to be more.
Facebook especially. Amazon's different because Amazon is much more direct results. So you can start with lower budgets on Amazon and go higher. But Facebook, yeah, man, the barrier is just getting higher and higher.
It gets to a point, unfortunately, it gets to a point where you don't have enough budget. You're really throwing your money away. You're gambling with money that you will never be able to recover, basically. So you're like scrubs for them. So you're going to get some impressions or something, but you're never going to be competitive. It's like entering a race with an engine that is 50 horsepower down on the rest. You're going to be there going in circles, but
it's like
you're not going to be able to do much.
For an F1 analogy, it's like Force India versus Ferrari. or maybe not Ferrari, but
Ferrari
maybe
these days is not
Mercedes,
good,
right? It's like Force India, they're just not going to beat them.
Right. You're competing to finish 8th, 9th, 10th, which is never to win. Right. And in F1, or anything, you still get a little reward. But in e-commerce, it's so competitive that you're not in the top 3. You are just might as well just not enter or not take place or take part of that particular event. I mean, you can try to put your money somewhere else, but that's the hardest thing. That clients say sometimes, well, I want to start with $1,000 a month. And it's like, okay, well,
yeah, that's no.
Right, exactly. It's like, I'll see how it goes.
I mean, that's fine. Yeah, I mean, if you want to just I mean, a month, I would just go daily. $1,000 a month is $33 a day or whatever. And it's like, that's fine if you're just testing a couple things, but no, I mean, like, don't expect to make money.
Right. But then the problem is that they are testing it at that rate. And it's like, I want to run this race with a bag of bricks in my backpack or something and see how I do. Okay, well, you're not going to do well. Yeah. You either give it all the effort and test it and then see if it's worth it for you, but don't enter half-assed, basically. You cannot test results saying, I'm going to do $1,000 a month. No, you can say, I'm going to do $1,000 for a week, and then that will be a little more of a test. I said, let's test it for a week, but you don't even have enough time in a week to start ranking and all that stuff. So there's a lot of factors that come to play when you do advertising and that's obviously what Facebook and Google's and everything do on purpose, because they don't want you to be a short-term run and go. They want you to be a long-term advertiser, and that's how they reward the advertisers that are there consistently. And even Google tells you, okay, you're getting this response with $60 a day, but you increase to $85 a day, you will get X more people and more conversions. They even give you these tools where they tell you spend a little more, but your results are going to be exponentially better because now you're missing peak hours or whatever. So it's just just because the tool has become so much better for the advertisers that you can select hours of the day, audiences, and all these little nitty-picky things, it's also become more expensive because then you want to be there when there's rush hour traffic on the web. You want to be there. Okay, everybody's browsing on the weekend after hours. They're trying to buy something. I need to pay more to be on top than what I would do at 3 a.m. on a Tuesday night. So it's important to understand that you need to have enough budget to test things competitively, as opposed to saying, "Oh no, I'm just gonna do a quick test," and with a little budget, because then you're doomed for failure from the beginning. So, anything else on the Amazon thing?
No, I mean, yeah, just try. I mean, if you're an Amazon seller, external traffic is something you should start thinking about. That's the main thing.
But the thing that we all agree is that I wouldn't just have a store on Amazon. I mean, you can start with Amazon and then develop your independent store, or have your independent store and then branch out to Amazon. But I wouldn't have just one or the other. I would definitely think that if you are serious about e-commerce, you need to have both. You don't want to rely just on Amazon, and you also want to expand your exposure basically by having your products that you sell on your store also on Amazon to open to a bigger audience, because yes, the margins will be less, but the volume will be higher, and that's how you compensate. So, all right. So now with after the Amazon, I wanted to ask you too about, well, the other thing that we've been looking into is Google with, I don't really remember, I think we talked about it here on the podcast when some media companies were threatening to start charging Google for their own listings on the search engine results pages, or the SERP that we call here. And then that kind of went away. And now it looks like in Australia, actually, they're almost ready to move forward with that. Google has threatened to basically say, okay, well, if you do that, we're going to not list you. Do you have more details on that information?
Yeah, I mean, basically, the argument for people who aren't aware, basically the news companies and blogs and whoever are saying, we want to get paid for being on Google's results page. So when people click on our articles, Google pays us, basically. And this is, the Australian government is proposing this as a law that Google's going to have to pay, and same with Facebook. And then Google said, well, if you do that, we're just going to remove news from Google in Australia. So all the news sites are going to be blacklisted. Why did these companies
ask Google to be paid?
Because their argument is that Google is just a search platform, but they don't make any content, right? Google isn't writing articles.
Right.
We provide the content, so we're providing the value, and Google should pay us for that content on being on their platform. Mm-hmm. That's their argument. The counter argument, and the one that will win, because they've done this before. In fact, Facebook did the same thing.
I thought I heard the same thing from Europe actually a while ago, that they were trying to do something like that in Europe.
Yeah, and basically this has happened before, and Facebook did the same thing, and now Google's doing the same thing, where they say, okay, well, we'll just blacklist all of your links. So if you're the I don't know who Australia Times or whatever, news companies they have there,
ABC and all that stuff.
You're just gonna be blacklisted. So you're not gonna show up in our search results anymore because we're not gonna pay you. And fine, like, okay, you won't show up in our, and what happened, because Facebook did this to a bunch of media companies too, because they wanted to get paid. And then the media companies lost so much traffic that they said, oh God, this was a big mistake. Please go back.
And they didn't even anticipate that in the beginning. I mean, if you're a media company, I mean, to me, that is so... I mean, I was trying to find something more polite, but it's so stupid from the media companies, because if you look at your traffic from your website, I'm sure when they look at their own analytics traffic, they can see that probably, I would just like to guess that a third, if not more, of that traffic.
Yeah, it depends on the company. Some publications,
pretty much exclusively,
80% of their traffic is SEO.
Right.
Is that they
it's
just
organic
rank
traffic.
Organically.
Right. So I would say between 30 and 50% of our traffic comes from organic traffic, which is basically Google. I mean, maybe a little bit Bing or something, if that is even counting. But So when you get so much traffic from a source that is giving you a platform to basically you're optimizing your article so you rank on page 1, 2, 3, whatever. So you drive traffic to your website, which in turns means that those visitors are being exposed to your advertisers, which you get paid for. You get clicks. You have all these tricks to get like multiple clicks with all these things that we've promoted with the clickbaits and the photo galleries that each of them counts as a page. I mean, all the tricks that they do at the media agency's website, so the media company websites, to encourage more page views and more clicks and everything, which again, that's how they justify the price and the rates to their advertisers. So now they say, we're going to sacrifice that and we're going to charge Google just to put our content there because it's free and they're also making money on advertisers. It's like, well, I don't know how that's going to balance. You know, if Google was
It's not. I mean, it's very simple. It's not. Like I said, Facebook already did this back in the day, and the media companies lost so much traffic from being blacklisted from Facebook that they went back and said, no, Facebook, please, we changed our minds.
So what's wrong with these people?
The same thing's going to happen. I mean, I'm telling you this. I don't need a crystal ball here. I can tell you the same exact thing.
It's like a tug of war where they're saying this, and then I'm reading out the headline now. It says Google threatens to shut down.
The media companies, they got killed by social media and Google because they don't have ad platforms that can compete.
Right.
The ad platform that you know, whoever the Australia Sun Times might have is not going to compete with Facebook's.
Yeah.
And so they want to make more money in any way they can.
Welcome competition.
But
it's the same thing.
They're going to lose so much traffic that it's not going to be worth it at all.
But that's not even for the normal advertising. I mean, the typical newspaper classifieds, where you have job classifieds, real estate, anything that was basically things for sale, whatever. Back in the days was basically you go to a classified section of the newspaper, you have a thick section with all the ads and everything, and you were paying for each square inch or whatever. Now that is gone. I mean, nobody advertises in a newspaper that. I mean, they can advertise on their online version, but most of the advertising for classifieds.
No, and that's why really all the media companies have gone to subscriptions.
Right. Exactly.
Because that's the way that makes money.
Exactly.
The banner ads on a website, they just don't make that much money.
And and you use them all the time. The pop-up blockers and the ad blockers and all that stuff.
Yeah. Plus, most people start using, because then, you know, and of course the companies themselves are really guilty of this, because I don't mind a little side banner or something, doesn't bother me. But when you have autoplay videos, pop-ups, I mean, it gets ridiculous.
Yeah,
and that's why people use ad blockers.
Right. And it's detrimental to them because, like you said, I go to different newspapers.
Right. I said on this podcast before, say it again. I never use Forbes anymore. First of all, because Forbes' editorial standards are in the fucking toilet these days. But second of all, because they let literally anybody write on Forbes now. But second of all, they have the most ridiculous,
annoying,
ads
pop-ups
on
and
their
everything.
page. It's not even funny. And so it's like, that's, I don't use Forbes
It's
at all.
almost like
I will never click on a
they're
Forbes
trying
link.
to annoy their visitors so much to force them into, okay, well, you pay, then you will not see these ads or this, which you still see ads. It's just that you see the whole story versus seeing the little snippet and it says, okay, now you need to pay for a subscription. But I think that's a wrong technique. But anyways, that's up to them. So, all right. So finally for today, we have this section that we are talking more frequently now, which is our crypto watch. And every day or every week that we discuss cryptocurrencies and the blockchain and everything, is like more news are happening. And this week again, Bitcoin is like everywhere these days, because obviously, like you said, even your taxi driver is now recommending Bitcoin and all that stuff. So that's how popular it is these days again. But Bitcoin, when it's been like a roller coaster lately, which, as we said last week, is pretty much normal. So get used to it. It's like say, oh, this is like a roller coaster. Oh, it's because it's a roller coaster. Okay, well, that's what Bitcoin is. But what happened, or what was the thing that you think triggered the downhill slope that we had in the last couple of days, where I think yesterday went down all the way to 29 at some point? Anything in particular you think triggered that, or false news, fake news, real news, sell-off?
There's a couple things. One was the Tether. This was like a few days ago or a week ago. There's a guy who wrote an article about Tether, why he thinks it's a fraud. And I have no idea whether Tether is legitimate or not. They are under federal investigation.
Well,
And the federal investigators.
Let's explain briefly what Tether is. So you
Yeah,
know.
Tether is a stable coin that is matched to the dollar, and so
Stable coin, meaning that it's
that
stable,
it's always worth a dollar.
steady, right?
And the reason people use Tether, traders especially use Tether instead of using US dollars or euros or whatever, is because it's just so much more convenient. You know, to move money around in the traditional banking system is a pain in the ass and it sucks. Tether is a stable coin that's always worth $1, but you can move it around very quickly in the same way you could a cryptocurrency.
Right.
And it doesn't have all the regulatory hurdles. It makes the life of any trader much easier. And so Tether is used a lot on especially foreign exchanges. Like it's not on Coinbase. Coinbase has their own USDC stable coin, but like Binance uses Tether, and so it's the most popular stable coin basically, and it's mostly used for trading. But there's speculation that there may be fraud, because how Tether works is they say, okay, the way they keep it pegged at $1 is if the market cap of Tether is $1 billion, then each Tether that means that they issue basically 1 billion Tether.
Tether, right?
And so as basically the number of issued Tether goes up, they are supposed to have that exact amount in collateral, essentially.
In dollars, right.
In real money. And there's speculation. Again, I have no idea. I have not looked in Tether's books. Nobody has, obviously. I'll let the federal investigators do their thing. So Tether, do not sue me. I have no idea. But there's speculation that Tether may be issuing more Tether, but without the backing, and essentially faking money. And that this fake money is then being used to prop up the Bitcoin market.
Basically saying that potentially some people might be buying Bitcoin with Tether that is not specifically backed up by.
Right. There may be some. First of all, they've been saying this since the 2017 rally. They were talking about this. This is nothing new. Tether may be fraudulent or totally legit. I don't know. But it doesn't matter. I mean, if it comes out, right, if all of a sudden the DOJ comes out and says, oh, Tether is fraudulent, they, printed 30% more coins than or issued 30% more coins than they had in dollars, and so they're faking it, whatever. Yeah, it will have a short-term impact on Bitcoin, because obviously there's a lot of volume in Bitcoin that uses Tether, but the article that went viral was saying that, oh, this whole rally has been caused by Tether printing. That's bullshit. That's not true at all. The reason Tether issuance has gone up is because there's been so many new entrants into the market. Like, he's basically like putting the cart before the horse, in my opinion.
Well, I think
where he's saying,
of people,
oh, look at this chart where Tether went up so much as far as new. Basically, the market cap of Tether went up so much, and at the same time, the Bitcoin market cap went up so much. So it's really Tether that's causing this rally. And no, it's the opposite. It's that there's a ton. Bitcoin was having a rally, and Tether, obviously, because it's the largest stablecoin, is going to go up a lot because there's more people.
And I see a lot of people
Tether.
that would probably choose Tether because of the Tether with a dollar. Basically, they're being matched to a dollar and saying, okay, well, I'm kind of iffy with Bitcoins and Ethereums and all these other coins that are a little more volatile. But if I want to, if I'm doubting the dollar or something, I'm going to buy some Tether like you said, to ease my transactions. But I'm always thinking that I'm matching my Tether with the dollar, which is part of the reason. It's almost like when the dollar was, or basically all the currencies were matched to the gold reserves. And then we, that stopped happening back in Nixon's time. So, so there was another thing.
But so, anyways, I mean, if Tether comes out as a fraud, that doesn't affect Bitcoin. Bitcoin is totally separate from
It's
Tether.
a whole separate thing. It's like
and so yes, will there be a temporary blip? I'm sure the markets will temporarily drop because basically it'll lose a certain amount of volume. But first of all, there's plenty of other stable coins that are definitely legit. And second of all, it's just
a bad kid in a good neighborhood.
it's just
basically.
bullshit.
Yeah.
I mean, it's just bullshit. Anyways, so that's that. And they've been talking about this for years. It's nothing new.
Right.
And then the other thing was yesterday. Basically, there was false reporting that there was a double spend on Bitcoin, and
That's the one that I didn't quite understand. So what does that mean?
yeah, the double spend thing, it was just wrong. It's just false reporting. There's not much more to say other than that.
But what does that mean? What does double spend mean?
It's a little technical, but basically it was saying that there's block rewards that are given to miners when they are mining Bitcoin, and there was a double reward given. So how I don't want to get too in depth on it. There's people who give very great explanations of it if you want to get super in depth, but essentially you can put out a reward for validating your transaction. And you can put it out at different levels, and then miners can choose to accept. It's like a bounty, right? To accept that reward or not. And so if your reward is really low, then the miners are going to say, no, we're not going to validate it. And so basically this person or whoever was doing this put out multiple rewards over and over, higher and higher. And then at the same time, essentially, two miners took the reward at different levels.
Okay.
And so one miner took it at the higher price and one took it at a lower price. And so they were saying, oh, there was a double block reward, like a double spend. And it wasn't true. It basically, this happens pretty frequently. It just happened to happen at a time when there was a hard fork, which happens all the time. It was just kind of a specific time that it happened. And it was just wrong. It was just not true. It just looked like that. But then once the blockchain was validated, and this is why, Tyler Winklevoss said, this is a reason why on Gemini, on their exchange, he said they always wait for 2 or 3 validations before they confirm transactions, whereas some people only do single validate. And so they were saying, but once it was validated, then the one who was the lower block reward is the one who got it, and the higher block reward was removed. So it was just fake news, essentially. And it was false reporting.
But that just explains how in addition to the natural volatility of some of the cryptocurrencies, including Bitcoin, Ethereum, and so forth, it doesn't take much, like you said, fake news or overblown news to make it even more volatile. So again, it went down, I don't know, 15% or something, or
no, I mean it went down from 41 at the high to 29.
Right.
So that's the almost 30% drop.
But well, I mean, depends on how far back you look. Yeah, it was 41,
Well,
and then it
41
started
is
going down. This particular, I mean, it was trading at 35 or something for a while, and then it went down all the way to, remember that we're talking, it stabilized at 35 range, up and down a little bit. I think it went down all the way to 29.
Yeah.
Today it's up already to 33, so it's up about 10% in the last 24 hours. So, it's like we said. I mean, you need to stop watching these things on a daily basis. Just zoom out and look at the overall value, and you say, okay, well, this is something that just 12 months ago was worth 4,000 or 5,000, even you go back in time, and now it's worth 33. Okay, I'm gonna stop watching now whether this happens or not, because people are just trying to find something to make it, headlines. So, anyways, that's it for today for the Crypto Watch. We'll keep watching it because we like it.
And the dumb thing too that always happens, and this is why, markets are always irrational. This happens with Bitcoin, but then Ethereum drops 12% also.
Right, exactly.
It has nothing to do with Ethereum.
It's a whole different technology and everything. It's a whole different back end, basically. And it happens because it's part of the same neighborhood. It's just devaluating the whole neighborhood. So, but that's what makes it more interesting. But we'll get to that. We'll continue watching this, and it's just like everybody's guess. I mean, I like to feel like almost saying, what do you think is going to be the value of Bitcoin a week from today when we do the next podcast? You know, it's going to be today right now is 33.5. So it's almost like the guess game. You think next week?
I can't predict that short term, but I've said before, I said again, I think that there's no guarantees, obviously, but I think the way Bitcoin's moved, because I've been watching Bitcoin for many years, and especially with the institutional big money flowing in now. Like the good news this week was that BlackRock got approved by the SEC.
That's right. Yeah,
and
that's
BlackRock, which has $8 trillion assets under management. It's the largest money manager in the world,
Right.
so to speak. They got approved by the SEC to use cryptocurrencies in all sorts of methods. So, for example, you could have Bitcoin in your 401k pretty soon.
Right.
And that would really open the floodgates. So I think we could see Bitcoin go north of 100,000 this year. I really do think so. Now, that's not a guarantee, but I think that there's a decent chance that that could happen.
Right. With a bunch of hiccups in the way. So that's just what we want to emphasize. So, but
Not
that's
investment
just
advice.
that's just our opinion.
Invest
We like it.
This is purely speculation. I'm an idiot. Don't listen to me.
We do this for entertainment purposes and just to have fun. But yeah, I mean, definitely. I mean, on a serious note, do your research and read about it. I mean, you like it. You definitely need to invest only on things that you understand. If you don't understand it, how many people are there that say, "Oh, Bitcoin, this or that," and when you ask them, they have no freaking clue how Bitcoin works or what it is or anything. So do not ever invest in things you don't understand. If you understand Starbucks and you have a coffee and you see how they make money because they charge a lot for a coffee that costs them very little money, invest in Starbucks. So the same thing for every other company that you use on a daily basis. Bitcoin
And
is a little different.
have conviction.
Yeah.
Most investors don't have conviction.
Well,
Even and I'm guilty of this too. I've had stocks where I knew I was right, and then after a year, it didn't do what I wanted, what I thought it would do, and I didn't have the conviction. And then, of course, a few months after,
it happens.
It happens.
Yeah.
Right. Have conviction.
Yeah, I mean,
It
do your
matters.
research. Again, do your research. When you knowledge is power, and nothing more than stocks. I mean, the market is going to be very irrational because it's like the herd mentality. But at the same time, the market is the market. If you have convictions and you think this is a good company with a good CEO with solid whatever, that's the company you want to invest in.
I'll give an example of
you're going to
one-
sleep well at night. That's the main thing. You know.
I'll give an example of a stock that I did have conviction on that's paid off this year or this last 6 months, whatever. Taiwan Semiconductor Manufacturing
Oh
Company.
yeah, I remember that. Yeah.
This is a company that I bought stock in a couple years ago when it was like in the 30s per share. And I just was like, man, I don't understand how this company isn't worth more money. They're the largest manufacturer in the world. Everybody else, AMD said we're not manufacturing anymore. Intel's totally falling apart.
Intel now has the third or fourth CEO in the last 10 years.
Yeah. I think their new CEO may be good, but
Yeah.
anyways, that's a different topic. But and they had contracts with Apple, contracts with the U.S. Department of Defense. I mean, they had all of these things. They have the best, the rise in ASICs, which is application specific, basically chips, and there's basically 20 different reasons why this company should be worth much more than it was. But I bought it, and for the first year, it didn't move that much, like I wanted it to. And I actually bought the first time and it went down and I bought more.
Yeah.
And it took a while. And then finally this year, it roared. I mean, it went from like 40 a share all the way to, I think it's 130 a share now.
Yeah.
And I had the conviction and it finally paid off. But I was wrong, basically, so to speak, for over a year, and I had to just hold because I knew it was going to happen eventually.
Yeah, it's hard to it's almost, I mean, for me, it's more difficult to know when to sell than when to buy. When to buy, you find buying opportunities. When
That's
to sell.
one thing I'm looking at right now with TSA because I haven't sold yet, and I'm like,
Yeah.
I need to think about it.
Right. Just set your top limit and say, okay, I may be losing something on the upside,
Yeah,
but,
exactly.
but I feel comfortable now selling. So, all right, well, enough for today.
That's all that said. This is not advice.
Do not listen to us, just watch us for entertainment purposes. But yeah, we will discuss this on a regular basis. 'Cause, we like to share it with you guys. So that's all we have for today anyways. David, any other plans? Basketball is back in full swing. I do want to do a podcast about F1. Unfortunately, the beginning of the season has been delayed about a couple of weeks with the cancellation of the or postponement. Actually, it hasn't canceled the Australian.
We'll do an F1 pre-show.
Yeah,
when
I
we
just
get
want you to
closer
brush up on it so you can ask intelligent questions when we get to it, and don't ask me about drivers that were retired 5 years ago and things like that. So it's just like me with basketball. I still talk about the Suns from the good era when they went to the finals. So that was
We're back in a good era, baby.
Yeah, I know. That's a new one, new good one. All right, guys, that's it for today. Have a great weekend, and we'll talk soon. Bye-bye.